Well, good evening, ladies and gentlemen. It's an absolute pleasure and an honor to be here. In particular, just to be surrounded by so many people who are passionate about something that is very near and dear to my heart, and people who are really doing stuff to affect change. I'm here to talk about credit unions. Anyone who's ever tried to become a member or to take out a loan or use a current account, if your local credit union has that, has probably discovered that they are often harder than they should be to access those services. So I want to talk a little bit about why that is and to encourage you to persevere. So I think one of the things that we have been rubbing up against tonight in all these discussions is that the problem we're trying to solve and to tackle is about more than just a few bad actors. The payday lenders of this world are absolutely appalling. To profit so cruelly from the vulnerability of others is disgusting and has absolutely no place in our society and in our communities. But I would suggest, and I think many would probably agree, that the wongas of this world are a symptom of a deeper problem. They're an obvious villain, but they stem from something much more corrosive, more insidious, and more entrenched. The wongas of this world arise because our banking system fundamentally doesn't serve everyone. It is set up to help the wealthy get wealthier and to drive profits to shareholders far away from those they are profiting from. Now, I don't mean geographic distance, right? This isn't a statement about international investment, probably another conversation for another day. But I mean relational distance. Our system is set up to create as much relational distance as possible from those using our banking services and those profiting from them. Now, there's 10 or 10,000 different ways that I could tackle this, right? The kind of lenses or angles to look at that institutional and structural injustice. We could look at the crash and what it exposed about our banking system. We could look through the lens of money and power and how insidiously and intimately they are interwoven. But I want to focus specifically tonight on the cost of banking. At a very high level, and please forgive my simplification of this, but at a very high level, our banking system is essentially set up to serve low-risk customers, or in particular, how we define low risk. Because interestingly, if you look at how, in terms of the credit union, and you look at how our loans are repaid, we don't actually have high-risk customers, but they're perceived to be high risk. And our system is set up to serve the low-risk customers. So you're low risk if you have a regular income, if you have a decent credit score, if you have a stable address, if your utilities come to that address, if you have assets, so whether that's property or cash in the bank. There's a whole other range of things, but those are the kind of key ones. And banks want low-risk customers because they can make money off of them, and they're essentially a safe gamble, right? Every loan is a gamble, particularly every unsecured loan, which are very hard to access for many people. So what banks have done is they've created this pool of customers who are a very large pool, right, at scale. So we're talking a very large pool of customers who are very low risk, which means they can provide services very cheap. So free current accounts or zero to low interest being obvious examples for initial loans and that kind of thing. Banks don't have a lot of incentive to provide services to those who are higher risk or who they judge to be higher risk. So individuals without a stable income, without assets, without a steady fixed address, without a little envelope that has utilities coming to them in their name at that address. Perhaps someone who's fled domestic violence or has just come out of prison, or someone who has just hit a really tough time and is increasingly vulnerable. And for those deemed high-risk individuals, because those individuals are seen as just a number on a sheet rather than a human, and the score of how risky a gamble they are is jacked up, when banks do extend services to them, they have incredibly punitive fees and very high interest rates. So I joined the board of London Community Credit Union, which is based out in East London, around the time we were deeply immersed in figuring out our current account product. Basically, the cooperative bank provided a platform to credit unions around the country. It wasn't profitable enough for them, so they withdrew it, and credit unions everywhere were left scrambling. What do we do? They're just isn't the infrastructure to have a current account as part of a credit union. Do we create our own, or do we withdraw this service from members? So at LCCU, because we know that many of our members can't access current accounts other places, and in a world that increasingly relies on having a bank account to make the most basic payments of life, we decided to continue and to invest in figuring out a way to make a current account possible. Happy to answer any questions about that afterwards. I won't go into that now, but it's been a long and arduous journey. But what I bring this up because we often think about credit unions as being affordable, non-horrible loans, right, to people who would otherwise go to Wonga. And that is absolutely 100% true. But what I'd like to argue is that credit unions can be so much more than that. They can be so much more than just an institution where people who are excluded can find financial services. So when we were going through this process of sorting out the current account, I was really shocked. Both with the previous current account and the one that we were investing in, at the fees that were associated with it, and in particular a card. So members could be paying up to £5, £8, even £10 a month to have access to essentially a debit card attached to a current account, depending on the level of service that they needed. And what struck me is we weren't making a profit on those fees. So they barely cover the cost of running the service, not to mention staff, We weren't making a profit off of charging that. But to me, it felt ridiculous because I was sitting here thinking, well, I could go down the street, instead of paying 60 quid a year for a current account and debit card, I can have it for free at High Street Bank. And then it kind of dawned on me, and I began to realize that actually I had become so disconnected from the true cost of banking. It costs to make transactions. It costs to integrate a card with an account platform. It costs to have finance teams who check the numbers and make sure everything's added up, not to mention having a brick and mortar bank branch. Banking fundamentally costs, and I had forgotten that because I was immersed in a system that was free to me, a system that could be free to me because of my risk profile as it was defined, and because they could make money off me. And they saw me as somebody who was a safe bet. And as a result, I was complicit in a system that was excluding my neighbors and driving them at their most vulnerable to the Wongas of this world. Now, I'm not here to say, go leave every single one of your high street banks. It would be amazing if that was possible. I've changed some of my banking habits, but not all of them. I'm not completely away from high street banks. I think some of that is because credit unions at this point are not equipped to provide the full suite of services that we would like to. The comment earlier that it's a decades-long process, that is very true, very, very true. I'm also not here to say that credit unions are the answer to everything. There are two reasons, though, in particular, why I think credit unions are worth the perseverance, are worth sticking with it even when they can feel incredibly unprofessional or clunky, or the processes are just irritating and time-consuming. And that's first because charities cannot change the institutional and structural injustice of our financial system by themselves. Don't get me wrong, they're hugely important in the wider ecosystem in terms of how we think about money, but they cannot do it alone. And so we need something where when someone like I did, who has that choice and has that flexibility and isn't excluded from high street banks, but when I lift up my head and said, hang on a minute, I want to use my economic capital, my economic power to do something different. There needs to be something different for them to do, right? There needs to be something other than just donating to a charity for them to do. And I think that's, again, not to say don't donate to the charity, but there's got to be an institution that is a meaningful alternative to the high street banks. And credit unions are working towards and can continue to be that. They are sustainable, profitable business models that don't rely on grant funding or philanthropic donations to keep going. They can be sustainable and profitable for everyone. LCCU is currently, and is a good example of that. And the second point is because credit unions reduce that relational distance between the borrower and the lender, which I think in so many ways is what drives that injustice in our system. So the ultimate decider in whether or not someone gets a loan at the credit union, or whether they can extend it, or whether they can reduce their monthly payments, isn't just about the numbers on the page in front. It's about who they are, what's happening in their life. Are they at risk of losing their housing? What's going on in that individual's life? And that shapes the decision that we make. So it's lending that is oriented towards supporting our neighbors and our neighbors supporting us. Because I think it can be very easy to forget that we could easily, any one of us, could wind up in a situation where we desperately need that help. So it's not about squeezing profit from each other, but about supporting each other and our neighbors. And it's because of those two, that sustainable, profitable business model and the relational approach to lending, that fundamentally means credit unions are oriented towards seeing the communities they serve thrive. Again, credit unions are not the answer to all the world's problems. Right now, they can feel limited, they can feel clunky, it can be a long process to kind of get into it. But I would encourage you to persevere, because credit unions are only a tool. They're only a mechanism, and it is by all of us choosing to take out a loan from the credit union when potentially we could have access to a cheaper credit card. It is by everyone saying, do you know what? Banking costs, and I'm going to be willing to pay that £5 a month for a current account, so that maybe if I do it and my neighbor does it and their neighbor does it and their neighbor does it, everybody doesn't wind up paying £5 a month, but everybody pays 3 or even 1. So tonight we've heard from a lot of the speakers about this call of the gospel to love our neighbor and what that looks like. And I think, as we all know, that looks as diverse and different as humanity itself, right? It looks like volunteering at a soup kitchen. It looks like being involved with charity. It looks like hosting a film night or having people around for dinner. But it also, I would argue, looks like being intentional about where you put your money. Do we, and I count myself absolutely as part of this, do we continue to be complicit in and perpetuate a system that sends our neighbors to Wonga? Or do we invest in institutions like credit unions that place human flourishing at the very heart, not of just a nice charitable cause, but at the heart of a sustainable, thriving business model?